Hello traders, and welcome back to Explain the Charts. Today is October 2nd, 2025, and we are taking a deep dive into the price action and news surrounding Ethereum, symbol ETHUSD. We will kick things off with a summary of the latest market-moving news before transitioning into a detailed technical analysis of the charts. The major headline dominating the crypto space is Bitcoin's explosive start to October, with it rallying hard towards the $118,200 level. This move is creating a powerful tailwind for the entire crypto market, with many traders now expecting altcoins like Ethereum to follow suit and post significant gains. Looking specifically at Ethereum, the sentiment from institutional players appears quite bullish. We've seen reports of over $500 million flowing into spot Ether ETFs, a massive signal of confidence from the world of traditional finance. This long-term optimism is echoed by analysts like Tom Lee, who has called Ether undervalued. He predicts significant price increases in the future, driven by wider adoption from both Wall Street and emerging AI companies. On the flip side of this bullish news, the price has recently struggled, encountering stiff resistance right around the $4,300 mark before its most recent rebound. This highlights an interesting observation from a recent community survey. Without a clear and compelling narrative, Ethereum's impressive technical strengths can sometimes be overlooked by the market. So today, our goal is to combine the news with the technicals to build a clear narrative for what might be next. Let's begin on the daily chart for ETHUSD, where we can see the broader market structure over the past year and a half. It's immediately clear that it has been an incredibly volatile ride, with massive swings in both directions. We saw a major cycle peak back in August of this year, where the price rocketed up just shy of the psychological $5,000 level. However, prior to that monumental run, the market endured a brutal crash in early 2025. During that period, the price plummeted from around $3,700 all the way down to a yearly low near $1,400 in April. That April low proved to be a critical turning point, establishing a major long-term support level that held firm and kick-started the bull run to the August highs. The sheer scale of that rally, from $1,400 to nearly $5,000, demonstrates the immense buying pressure that can rapidly enter this market when conditions are right. From this long-term perspective, we can identify some absolutely critical price zones to keep on our radar. The area between $3,800 and $4,000 has repeatedly acted as both support and resistance, marking it as a key pivot zone for market control. Furthermore, the $3,000 and $2,500 levels have also served as significant areas of consolidation and support in the past, and would be key areas to watch in a deeper correction. Now, let's zoom in on the more recent price action, focusing on the period from the August peak to today. After topping out above $4,800, Ethereum entered a necessary corrective phase, pulling back for several weeks in a clear downtrend. This correction eventually found its footing just a week ago, on September 25th, establishing a strong swing low right around the $3,875 level. This level now stands as the most crucial short-term support for bulls to defend. After hitting that low, the price went into a tight consolidation for a few days before we witnessed an explosive move upwards yesterday, on October 1st. This massive green candle represents a nearly 5% surge in a single day, with the price closing strong at $4,352. This impulsive move directly correlates with the news of Bitcoin's powerful rally, confirming that ETH is currently moving in tandem with the market leader. This brings us right up to a critical juncture, testing the resistance level around $4,300 that was mentioned in the news. The fact that we are currently trading just above it is a very important test for the bulls. They must defend this level to prove the breakout is legitimate. A failure to hold here could invalidate the entire move. To get a more granular view of how this powerful rally unfolded, let's switch to the 15-minute chart. This time frame shows us the price action from the last several days, including the consolidation and the subsequent breakout. We can clearly see the price was trading in a relatively tight range, mostly between $4,100 and $4,200 during the final days of September. This coiling price action set the stage for a big move. As we rolled into the new month on October 1st, the buying volume began to surge, and the price broke decisively out of that range, pushing past $4,200 with significant momentum. Throughout the rally, we can identify a few brief periods of consolidation, but every small dip was aggressively bought up. This pattern of higher highs and higher lows on the intraday chart indicates strong control by the bulls. This is exactly the kind of confident price action that suggests a potential trend reversal is underway. The rally maintained its strength throughout the day, pushing well into the $4,300s and validating the bullish momentum we saw on the daily candle. Now, let's switch back to the daily chart to put all these pieces together and form a cohesive outlook. The long-term picture is one of recovery from a multi-week correction, while the short-term picture is a powerful bullish reversal currently testing a key resistance. This brings us to a critical inflection point, so let's outline the potential scenarios. For the bullish case, which I believe has the highest probability, we need to see price definitively hold above the $4,300 level, turning this former resistance into new support. If Bitcoin maintains its upward trajectory and the positive sentiment from ETF inflows continues, the next logical target for ETH is a retest of those August highs in the $4,800 to $5,000 range. A confirmed daily close above the $4,400 level would act as a strong confirmation for this bullish scenario. Given the impulsive nature of the recent move, I'd assign a 60% probability to this bullish continuation over the coming weeks. Alternatively, let's consider the bearish case, where this entire move is a bull trap. In this scenario, we would see a decisive rejection from the current price zone. The price would fail to hold above $4,300 and would likely fall back quickly to test our first key support around $4,150. A break below that level would be a very negative development, opening the door for a complete retracement back to the recent low at $3,875. This bearish outcome would become much more likely if we see Bitcoin get rejected at its own resistance levels. I believe there is a 30% chance of this bearish reversal playing out. Finally, there is a small 10% chance that the market needs more time to decide, leading to a period of sideways consolidation between roughly $4,150 and $4,350. So, to quickly recap the most important price levels you should be watching. On the downside, our immediate support zone is between $4,150 and $4,200. The line in the sand for the current bullish structure is the recent swing low at $3,875. On the upside, immediate resistance is in the $4,350 to $4,400 area, which we are currently testing. If we break through that, the primary bullish target becomes the all-time high zone of $4,800 to $5,000. Moving forward, pay close attention to Bitcoin's price action and watch the volume closely. High volume on a breakout above $4,400 would be very bullish, while high volume on a breakdown below $4,150 would be a major warning sign. That concludes our analysis of Ethereum for today. Thank you for watching Explain the Charts. If you found this analysis helpful, please show your support by hitting the like button and subscribing for more in-depth content. Please remember, this video is for educational purposes only and should not be considered financial advice. You should always conduct your own thorough research before making any investment or trading decisions. Trade safe, stay informed, and we'll see you in the next video.